Welcome to Who Knows. Today, I'm excited to talk with Melody Wright. Melody, thanks for being here today.
Thank you so much. It's my pleasure. Thank you for inviting me.
I've heard you talk and read your writings and seen your videos on YouTube. I mean, a lot of different ways to analyze basically what's going on in the housing market in particular. And I really appreciate your view on it and the knowledge and data you bring to it. So I guess I wanted to start with the highest level question is what's the current state of the housing market and what is the story of how we got here?
It's abysmal. No, last year in the existing home market, we had the lowest sales since 1995, and we've increased population by over 20% since then. So, not good. You can look back and kind of for September results, these were the lowest except for last year, since 1999. So, it's frozen. I will say we just got existing home sales yesterday, and we saw a little bit of movement non-seasonally, which I call motivated selling. That's where you actually
Mhm.
have sales up but prices down, and I saw that in many of the cities that I track. I track 85 cities, so 42 of them had year-over-year price declines, and that was compared to 20 last year. Yeah, and so, what a lot of people are confused about is why aren't prices going down, with such low sales? What's happening is in our K-shaped economy, it's who can transact, and those are two groups. That's one, the top 10%, although it's increasingly becoming the top 1% because the super prime are getting hit hard. You can hear from people making $300,000 if they feel like they don't have enough money. And then the other is what's been propped up by kind of government sponsored subprime, and that's the FHA program, which in the previous cycle was about 7% of origination. It's now around 13 to 15%, depending on the month. And that is, essentially holding up those higher home prices because these folks come in with a 3.5% down payment. They can have a credit score as low as 580. And then through the American Rescue Act, there was so much money given out to cities and states. And what they did was create down payment assistance programs. I mean, upwards of 30,000, 50,000. And so what happens is these folks get into loans they cannot afford. And so, on top of the other thing that's made this housing market program frozen, um, is that FHA program that I was just saying. Sorry, I misspoke there. But that FHA program that Biden put into place during the election year, where people could just keep going back over and over and getting their missed payments put at the back of the loan in a non-interest bearing lien. And my colleague John Comiskey has done a study on that. And if you took one of these workouts, you are 5 to 7 times more likely to take out another one, which is in mortgage and credit insanity. Okay, so they finally put the guardrails on that program, and those guardrails went into effect on 10/1. So that's another reason you haven't seen more distress selling. Although I can see it in my client books that folks who get that foreclosure notice, that's when they ultimately will start reducing the price on their home. So there's a lot of reasons why prices have not come down, but all of those things that were kind of holding up prices are coming to their end. And I think what we're about to see is increased motivated and distress selling
Mm.
as folks, basic, and we can talk about how we got here, but I want to pause first to see if there's anything you want to ask about because it's a really long story, and the new homes also play a big role here. But I'll stop and let you, if there's anything you want to pull on there.
Okay. Yeah, let's get to the long story, but I don't know anything about any of this stuff, just so you know.
Okay.
So you
Oh,
can talk to me like I'm 5 years old.
okay.
Um when you say they put guardrails in place on these FHA loans, what does that mean? And what's
Perfect.
going to happen
Yep.
as a result of that?
So essentially, as I was kind of saying, you can come back over and over again. So they put a limit. You can only get one of these every 24 months. The other thing that they did is historically, and this is where things just got so crazy, you would always want the borrower to make trial payments before you give them a workout because they need to have skin in the game. And so, can you really afford this? Are you not just going to redefault over and over again, which is not good? And so now you do have to do trial payments again. So what I see is a lot of people fall out of these trial payment plans all of the time, and so I think this is gonna cause an issue. Now the problem is we won't even the servicers will have to wait, for all 3 months because it's usually 3 months trial payments before they can actually take any action, but these folks will be reported as delinquent during that trial period. So, let's say, October 1, they got into trouble, they could get one of those partial claims, let's say 3 months, but they can't come back and get another one, for 2 more years. Now, the other thing that a lot of people don't know is that if you have delinquent student loans over 270 days, you will not be eligible for this program.
Mm,
And that's huge because over 40% of FHA borrowers have student loans. Now, they're not all delinquent, but you think, okay, well, we're seeing about a 10% student loan delinquency rate right now. So, and here's the other thing that's so crazy is we still have 1.9 million people not even reporting to credit yet that are behind on their student loans. And so you might have heard in the spring about all of the impacts to credit scores because of delinquent student loans. Well, just think there's still people that haven't had those impacts yet. And
yeah.
so that these guardrails are going to be significant because the FHA is making up the largest share of delinquent loans at the moment because that is truly the subprime, but we're starting to see weakness in the prime borrowers as well.
Wow. It's crazy. So, you also, another piece you said there though was these houses. I mean, just from looking at houses, and so I'm from the Northeast. I'm from Boston, and I live in San Diego. So too ridiculous.
I'm
You're
sorry.
not supposed to
No,
laugh at
I'm
that, Melody.
laughing with you.
Yeah, yeah. So I
San
just
Diego blackpilled me after my trip
did it.
there. Oh, yeah.
I watched that video.
I came back a different person. I'm not kidding around.
Well, why don't we just take a little detour there and you tell us about San Diego? I watched your video.
Yeah,
I
so many
know all the
things.
spot. I know all the spots you went to, of course.
Yeah.
Yeah, tell me
So
what you learned about there.
I think, San Diego, I gotta tell you, I've been, many years of getting beat up out there for talking about these things because it is completely counter to what mainstream media and, the realtor cartel wants to talk about. So everybody told me nothing would ever happen in San Diego because, because of the military, because of DOD, veterans, housing subsidies, like it was going to be just fine. Well, then, I started hearing about veterans that were actually using the program to do short-term rental, like this, admitting it, that they were doing this. And nothing against veterans. I mean, I just think our entire culture at this point is I got to figure out how to get mine because I ain't getting it anywhere else.
Yeah.
That's
Yep.
and so then you look at just kind of San Diego, if you go to inside, Airbnb and you look at the map of San Diego, it looks like an infestation of these short-term rentals. And so they're everywhere. And so you look and you see San Diego has a very low owner occupancy rate, which is a problem when you get into times of distress. And when we arrived on scene, of course, as I rounded the corner, I thought the Renaissance Fair was in town. No, that's a lot, and that's the homeless camp. They just put nice colored tents, and it looks festive, but you can't get in there. And we could not get in there with the drone. Couldn't fly over it either. So it's,
Really?
and you live there, and I think OLOT was all about trying to get everybody out from under the underpasses and off the roads, but you still have that, right,
Yeah.
in San Diego. And so then you go out and you look at the new builds, of course, and as Travis called them, $1,000,000 shoeboxes
Yeah.
because that's
Hmm.
what they are. And it's like, who's going to afford this? I mean, because you look at household median income, and there's just people that aren't. Of course, there's always going to be people that get help from their families and things like that, but that's not a housing. That does not make a housing market. And then LA really put the nail in the coffin with Skid Row, and just I had been there before, but how it's grown and what it's turned into. But my point is that you can't have this mass exodus from California and think that home prices are going to be impacted or that there's not going to be issues there. And as soon as we got back, it had already started. You were seeing year-over-year price declines in San Diego. Now, it's not gonna matter to you for some time because they're so elevated, right? But what's happening is we can't get enough transactions to really move the needle. And so I was a little excited to see more sales last month. And guess who led the pack? The West and California, four big cities out in the West, year-over-year declines: Las Vegas,
Hmm.
San Diego, San Francisco, Seattle. And Los Angeles has been on that list on and off, and they're all down from the peak. But yeah, it's just it's n it you really the reason that black pilled me is because the narrative was just so strong. I mean, people were so convinced, and I'm one of those people that always think I'm wrong when somebody's that convinced, and I have to go, figure like, "Am I wrong again?" or whatever. But
Yeah.
going out there, I was just like, "No, no, you people, I'm done with you. Like, I'm done with the trolls. Like, this is a really serious situation." But I mean, what do you feel about it?
You hit on something earlier there where it's like it's so broken that I look at it and it's like the Venn diagram of who can afford this and is also willing to live in a shack. If you can afford a $1.3 million house, I'd assume you have some like aesthetics and style and that you like expect. So it's like, all right, you're gonna buy 900 square foot fixer upper for 1.2 and move in, but you can also afford that. It's like who are these people? And there's all these weird extra things in San Diego because I've been here a long time, but there's not like a good job market, I wouldn't say.
Yeah, I agree. Dove into it. Yeah,
Yeah, it's like I mean, I think there's like biotech and stuff, and that explains some of it, but a lot of it is like uh the boomer parents bought the house for their kids because they're worth 25 million.
that's right.
And the kids are like, PE teachers and they live in a $2 million house. So there's all these weird things going on. There's also, like Coronado, which did you go to Coronado at all? The
No,
island?
we
I don't think you
passed
did.
by there, but no, we didn't go to Coronado. No,
I mean, I have a friend who works for the city who says it's one third of the houses are second homes. So like it's the most beautiful place. It's got an incredible beach, the weather. It's in San Diego Bay, so you go like 5 minutes. You take a 5 minute ferry across the downtown. It's insane. And as a result, a third of the houses sit empty and no one ever uses them
that's all
because
over the
it's an
country.
investment vehicle
Yep,
instead of a place to live. So there's all these things that are just like don't make any sense. And yeah, I mean, I live in a very military area, and it seems to me that people are absolutely maxing out to buy these little 950 square foot places. I would guess. Um, it's it's crazy. And then the other thing is the dislocation between rents and your total payment if you were to buy right now.
oh yeah,
So if we rent, and if I were to buy the house I live in, I would at least double the payments and our lifestyle wouldn't change one bit. Like it doesn't, I don't know why. It
it doesn't
doesn't
make
make any
any
sense.
economic sense. Yeah, totally
No.
agree. And
Um, yeah, go ahead.
no, just emphasizing those empty second homes are all over the country. There's over 15 million vacant homes, and that's not abandoned, that's vacant. And that
Yeah.
doesn't even include the 3 million they tag for seasonal properties like the ones you're talking about. And so we have just lost our
Wow.
minds.
Yeah.
And somehow NAR has convinced everybody that there's a housing shortage. Is there affordable housing? Is there a shortage of affordable housing? Absolutely, but that's because people are in denial, not because we don't have enough housing units. If people weren't in denial, uh, uh, you know, uh, people would be selling their homes instead of. I have a colleague down in Jacksonville. He calls it rage delisting because they think they're going to get. It's a boomer. It's their
Yeah.
second home, and they're like, "Hey, I don't have to rush on this. Not right now. And they're like, well, it's worth what my estimate has told me, even though I've done no repairs and, there's mold or it needs a new roof. And sure enough, they get angry and they just immediately delist. Like this is happening all over Florida right now.
Well, yeah, okay. So again, I know like real estate's local and it depends on where you live and the laws and all that, but again, in the places I look at Zillow, it is houses sitting forever.
Yeah.
And
Yeah.
so they're like, you guys are starting out way too high and you come down like,
A
you know,
thousand,
1,000, yeah. And
1,500.
you end up like your house is on the market for a year and you're still 100,000 above where
Right.
you need to be. And
Right.
it's
A
literally
million
on my
above.
street. There's a
Yeah.
house for sale like that on my street right now and I see it everywhere. So those are just like downsizing baby boomers essentially that want to cash out and they only want it at this rate. Is that what's
That's right, one
yeah,
of their 4 homes that they wanna get rid of, and in California is gonna be hit particularly so, if they've done it correctly, they, of course, don't qualify for the homestead exemption, but we know that most people just lie and get it, but insurance has gotten insane, like, I have a large, mortgage client in California, and, one of our servicers looked at just across the servicer's whole book, since 2020, it has increased over 50%, which is, that is a huge deal to these households. And then property taxes are going up, energy bills are going up,
a lot.
and so it's people just can't really these boomers can't afford holding these houses anymore. They need to let go of them because they're a drag. They're not they're burning expenses at this point. So California's gonna be hit hard. And I believe that some of that motivated selling last year that I saw was, foreign owners selling needing to sell because we have a ton of foreign ownership in this country. People use those houses as investments and money laundering schemes. And, as because what we're about to go into, I believe, is a globally synchronized downturn. And as those folks come under stress, you see the lines of people buying gold overseas, because they're worried, then those people are going to become net sellers as well. So we've had a recent uptick again in foreign buying this year, but it was dramatically down last year.
Interesting.
Yeah.
All right, so let's go back a step and get back to the part of the story of how we got here. And I
Oh,
know
how
that's a long story, but how do you parse out credit to 2008 or COVID or way before that? How did we get to this spot?
So, as I've started to look at I think one of our biggest problems in financial media is we look month over month, year over year. We don't take everything in context. And so, for the longest time, I didn't have the true historical NAR numbers, and I finally got them, and I was like, "Wait, what is happening here? Like these sales are so low, but how did we get here?" At the end of the last crisis, I actually had to manage default, because it was a crisis. I mean, we were getting, the agencies, Fannie Mae, Freddie Mac, were putting the gun to our heads. You have to get these properties off your books, these foreclosures. What they did is create a program, like auction programs, where they would bulk auction off all these foreclosed properties. Well, guess who the buyers were? It was institutional investors, oftentimes, because they got borrowings or had some sort of were government adjacent in some way, asset managers. And so they bought up all these homes. We don't really know how many are out there. You'll see it's about 2%, but in some markets it's way more than that. And so it really depends on the market, and it is in several big markets like Atlanta, where they have a very massive share of these. And what they did is they rented them out because people were becoming displaced from foreclosure, so they needed a single family home to live in, so they were renting them out. So then every television show on TV became about fixing and flipping. And so those who hadn't gotten completely wiped out, right, in the GFC started by mom and pops. These are your smaller investors, started buying homes and flipping them. And then it became a whole cottage industry of, syndicators, investors, and it just started growing and growing. then and they were doing that for mostly long-term rentals, some short-term rental, because we've always had short-term rental, like up here where I live in the Smokies. It's always been kind of part of the scene because you can't have big hotels in the Smokies that way. But then, COVID hit, and I believe the social contract had already been somewhat broken, but after 2000, but that was really broken after COVID, where you could have worked for somebody for 25 years. It didn't matter. You were gone. Goodbye. Get out of here. And so I think people were looking around for how can I get passive income? I mean, I'm terrified of and me, I left corporate America in 2019 without a job. I was just like, "I can't do this anymore. These people are crazy."
Yeah.
And so I think everybody's like, "What are we gonna do?" And then they had time on their hands to search, and then every YouTuber out there, I mean, there's so many of those influencers were like, "Short-term rental, Airbnb bros, like buy up a short-term rental." And so
Yeah.
everybody thought this was about the millennials doing household formation, but in reality, what it was all these speculators and investors, and Redfin tracks it, but they can't track it completely because you could take that home out in your name, not an LLC, and a lot of investors use FHA because it's very low risk to them. You can lie on your application and say you plan to occupy it, which is, what people are getting accused of now. Again, everybody does it, and it's hardly ever prosecuted. Nobody actually knows how much it's what Redfin can track. They said it was 30% of the market at the peak, but in reality, it was probably around 50%, if not higher. Like if you look at
Wow.
somewhere like Austin, and this is another huge problem. In Austin, Inman, which is an industry magazine, did a study and showed that 50% of the transactions weren't even happening on the multiple listing site service, which is how NAR actually tracks what's going on. And you had all these private investors coming in saying, "Oh, I have some cash because maybe I just did a cash out refi on my big California property or whatever. So I have some cash. Let me buy this little piece of crap down in Texas for 150,000, all cash." And that's actually what happened. All these people were paying all cash. We had the lowest first time home buyer participation last year on record since they started tracking in the 80s. And so
Yeah.
all of just regular Americans, I call them the forgotten Americans, were completely priced out as the investors went. Absolutely. And I saw this, and then unfortunately, it's not. We can all deride the Airbnb bros to some degree, but in reality, they were relying on experts and technology that told them, like Airbnb was smart. What they did in an evil way is that they limit how many Airbnbs you can see when you search. If you go to San Diego right now, it's going to come up with 1,000. You don't know that there's 15,000 there, or actually 12,500. Yeah, you
I
have
don't
no
know that.
idea, and they don't give their host data. Like they wouldn't tell you things like what's your anticipated revenue you're going to get. So up sprang another company called AirDNA that would you could pay for that data, but they would tell you their comps were ridiculous. Like, oh, I could get in Kyle, Texas, which is 20 miles south of Austin, I could get $600 a day, 50% of the year. No, no. But this is the crap they were spewing out. And I was actually helping one technology company, and they were unaware, and they were underwriting loans based on this information. They were unaware that you could actually select your data as the optimistic view, the realistic view, or just, average. And it's
Man.
always set on optimistic. Like nobody knows this. Only the coders who usually don't even know anything about the industry. You know what I mean? So anywho, all these people would walk into these banks, these what we call them non-QM lenders, and the lender would say, "Why buy one? You can buy 10." And and boom, it just became. These look like disease maps, Henry, all over the country. They're here in my small little town. Like we had this beautiful, it's called Tree Streets, where all the old homes are. Well, now every other one is vacant that was bought up in a fix and flip that they haven't finished. Now they're trying to sell it. It's just
Well,
it's
yeah,
awful.
it is.
I mean, yeah, but go ahead. So that was a lot too.
So, these houses aren't selling anymore, and the people that have actually been buying them are Blackstone, Airbnb people that go on YouTube, and boomers buying a second home. So, like, no one real is like buying a house to live in,
Really. And
basically.
yeah.
And what I mean, well, I guess this is probably, where does it go from here? But you said you think we're going into a globally synchronized downturn. I mean, what do you think that means? How are you seeing that play out?
Yeah. I mean, I just think we've been kicking the can for so long. You can look, and this is the law of diminishing returns, all of the stimulus, they always use housing every time since the 80s to kind of restart the economic engine. But you can see that we're not getting the same return anymore, and we've now run out of buyers.
Yeah.
But you're seeing it. We're all debt burdened. Our demographics across the world are abysmal, except for a few countries, but they'll also kind of follow the same pattern or are following the same pattern. And
So,
so,
sorry,
go
so
ahead.
demographics, you mean like there's more old people than young people? Is that the
Yeah,
problem you mean when you say that, or?
we're not there yet, like Japan is, but we're all on that path. We're not having babies at replacement rate anymore. And, the boomers, whether we want it to be so or not, we're going to lose 15.6 million between 2025, 2035, another 50 some odd million between 2035 and 2050, and they own the majority of the homes that none of us can afford. So we've got all kinds of structural problems happening. And I think it's probably worse in China than they're admitting. They're still having problems in their real estate sector. It's very difficult to understand what's going on with their economy, just because of how they run things. But all over the world, people are in trouble. Inflation hit them, and despite government intervention, despite government actions, we've kind of run out of road here. Which is, if people all the time talk about money printing, this, that, and the other, but it doesn't help those at the bottom or middle of the K. It only helps a very small percentage of the top, 1%, really, because you're starting to see, like I was saying earlier, the super prime, as I call them, they're getting impacted as well, because they're also, it's always doctors and dentists and people like and lawyers that invest in these silly schemes. Like, I've had people contact me, tell me, oh, was in 5 different multifamily schemes, and 3 of them haven't had money ever. So these guys are all getting impacted. And so you're really, if you're not in that top 0.1%, you're not doing great either.
Hmm.
That's really across the world. There's nobody that's doing great.
Man, it's crazy. I mean, the world owes itself more debt than it doesn't even make sense when you like zoom out the farthest. It's like, who do we owe all this debt to? How is that possible?
Right.
Um,
It's a big Ponzi scheme.
yeah. But I mean, so then, well, I guess it depends on your view. Like if there's persistent sell pressure because the Airbnbs are going belly up and Blackstone's taking losses and the boomers are dying over the next decade and selling their homes. So there's like persistent sell pressure coming on houses.
Right.
I mean, that's a good thing for young people trying to
100%.
buy a house,
Yep.
right? So it blows up all these banks, I bet. But it's if you're 28 and want to start a family, that's a good thing, right?
I'm rooting for it. They should.
Yeah.
These are false prices. They're not based on dynamics. It's all based on narrative and, crappy incentives. Like, so, no, it will be a good thing. The question just is, I mean, because politically, the class in power is going to be hurt the most by this. And so I think that's where you get a lot of the debate that this can't be possible and they'll never let it happen. But
Yeah.
in reality, are they about to let SNAP people not get their SNAP benefits in November? I mean, it's looking like it, right? Did they put these guardrails on that FHA program? Yes. I mean, we have to look at they can talk about a national housing emergency, which will probably end up being, like bailing out the builders and buying up some of those homes for affordable housing, like, programs across the country. But every action they're taking is putting the vice grip on. And the question is, do they know it or not? I don't have the answer to that. But yeah, I mean, it will be most impactful to to the boomers.
Mm, yeah. But then so like if there is this massive correction in housing coming, the fix, and you can explain it in different ways and put fancy terms on it, but the fix is always to have the money supply increase, right? So there's quantitative easing and bailouts and bail-ins, and there's stimulus checks and during the COVID stuff, and like all of it just expands the money supply. So correct me if I'm wrong, of course, but if they keep creating the dollars, or they fix it by creating more dollars than there are houses being created, don't the prices inevitably have to go back up anyway because they're
Mm.
printing more dollars?
So you have to look at the response last time and how little effect it had.
Okay.
So, I mean, they went all in. Quantitative easing, they went, they bought MBS back then. You got
So
a little.
this is
Go ahead.
2000, 2008,
Yeah.
2009. Okay.
Yeah. Yeah. And you can say that, so they did all that, but we were in the gutter for a very long time just because of the supply overhang, really.
Mm. Hmm.
Then around 2019, as people started getting, a little bit back on their feet and those millennials were coming into the market, then you started to see, and it happened before 2019, but it really started back in 2012. You started seeing gradual home price appreciation. So for years, it didn't work. The difference, I think, here, so one, I always say to people, because I agree with you and I understand the logic of that argument, but I say, come with me out on the road because you have no idea how much is out there. And once you stand in one of these mega sites that's completely empty, then they can't print enough money to deal
Yeah.
with the situation. And even if they tried, the pitchforks would come out because they don't have shelter as a primary need. And people don't have shelter, and homelessness is increasing all over the country, not just in California. And who's being added to that homeless population? It's the 55 plus. It's the boomers everybody wants to hate, but in reality, there's many of them that are not doing well either. Like I moved my mom in with
Man.
me, so I think that there would be a lot of societal issues if you tried to fix it that way. But I was just reading an article. They've come out, finally admitted after I was called crazy for years that, the survey of construction does not adequately show how much housing and permits and units we have out there. And you could just tell it because I would use the survey of construction, look at the building permits, and I would go to a town. I'd be like, "You're like missing 30% of this." They actually use that metric in this article I just read, which is funny. But anyway, my point is that we have no clue. We have no clue, and these people that went and built didn't have clue, and they didn't do their due diligence, and so I think we're going to be very focused on saving Wall Street. Although private credit, private equity, I think um, if there's it really feels like there's a concerted effort to address this by the banks. It's a long story that has how the banks were pulled back from mortgage after the GFC because of onerous leverage ratios and this thing called Basel III endgame, and certain assets were more higher risk weighted than others, and so banks just said, you know what, we're done. And the non-banks came in and they do the most of the lending, but those non-banks use lines of credits from the banks,
Yeah.
and I think that's exactly what you're starting to see explode in the auto sector is that what we call these non-depository financial institutions who are out there lending, but they're not banks.
Who are they? Or
It's like,
like,
yeah, like so Tricolor, First Brands, these
yeah.
people that just went bankrupt, and
Okay.
and also doing things like double pledging to those lines of credit. So there's a lot of fraud involved. So it was people that don't actually understand lending. It's crazy to me. And also many of them are not reporting to credit. And so the Fed uses Experian when they do their household debt and credit survey. And so I've now realized we're actually missing a huge chunk of distress because when I told you about that private note space, I went to a conference where all these guys go and I talked to them, and they're using these smaller servicers that don't report to credit. And so we're flying like completely blind into this thing, with just on a wave of absolutely untrue narrative to a point that it's actually hard to fathom sometimes, that this, but yeah, so I don't think they're gonna be able to print their way out of this. I mean, and what everyone has to remember, it's like, well, yeah, they did all the loan modifications after the GFC. We've already done that. We did that. We preempted it. And, we basically gave people 18 months of free without having to make a mortgage payment. And then we put it at the back of the loan in a non-interest bearing lien. We did that already. And so why do we have any delinquency right now? We shouldn't have any, you know?
Yeah, right.
And so Black Knight, who's an industry operator owned by ICE, who also owns the New York Stock Exchange, they published their delinquency report today. And they're like, delinquency down 2 basis points. It's like, okay, why is that? Because it rolled to foreclosure, liars. Okay. So there's just so many shenanigans. My favorite thing they do is say unbiased. We provide unbiased information. They don't tell you who they're missing from their data. And I happen to know because I'm in this world and it's really important who they're missing. But they say headline delinquency is down, but in reality, that's because it rolled. It rolled to foreclosure, and they exclude foreclosure from their headline delinquency rate.
Man.
It's just that simple. But if you don't know how to read these schedules, if you don't know what these words mean, then you believe them. And I mean, like last month when delinquency was up significantly, they said it was due to the calendar. And that's not how it works in mortgage. It's just not. So it's wild. Like I mean, this is just one massive, massive snow job is what it is. And people have no idea. And it's actually quite sad. They have no idea what's coming, but it's coming. It's just I say this about housing. It's like the Titanic. It takes a really long time to turn,
Mm.
much longer than it does to sink. And that's, and what we got in the last correction at least was a very large drop initially. Like it was like boom, the first year, almost like a 12%. And so, the other dynamic we haven't talked about is that new home inventory and what's happening there. They're basically stealing market share from the existing home market. And you've got a situation we've only seen one time before in history where new home prices are now less than existing home prices. That happened like 1 June in 2005. It's been persistent starting last year. So think a new home should be more
Yeah.
expensive than
Yeah.
an existing home that's like 100 years old and needs updates and things like that. No, so right now, the builders reported they just revised their July number down, and it went below that 400,000 mark. But they also have come out and told you that they're giving about $50 to $55,000 in incentives on top of that. So you're actually looking at an effective price around 350,000, whereas the existing market is at 422,000. Or well, they just reported
Wow.
yesterday around 415,000. Yeah. So it is so upside down, and what you're seeing is so sad. It's like it's sucking everybody out of the cities into these exurbs,
Yeah.
which of course then is a quality of life issue because you're spending 2 hours in the car or longer in horrible traffic because nobody addressed the infrastructure when they built all this crap. And so these city centers are just hollowing out. And it is happening without people, the existing home seller market understanding what's happening. And so they're going to be caught, unaware. And at the same time, those people that bought in those excerpts, unfortunately, a lot of times they may be one of a handful that actually end up being in that neighborhood because many of them just won't sell. And we've seen that in previous cycles. We've seen in previous cycles, the last one in the Great Depression, after that, people bulldozing those communities, and we'll see it again.
Just because we didn't need the supply, and also no one wants to live in them. Essentially, longer
Yeah,
term. Is that?
right,
I mean, that
right.
makes sense to me.
It's very Evergrande-esque where, building out in the middle of a cow pasture, 12 miles, away from the nearest gas station, like an hour and a half out of Austin. Like, why would you do that? So they're scary and they're everywhere. And it's
Yeah,
it's just hard, even when you capture this drone footage and all this, you can't actually comprehend it because you think, "Oh, that's just that one place," but it's, like, replicated all over the country where they could build. Yeah, it's wild.
yeah, and it's like, not to be too picky and choosy here, but if I'm not living in the city or close by, I don't think I want a shared wall. Can I get a
Exactly.
yard? Can I get a yard if I'm 45
That's
minutes out?
and that's always been the trade-off, right? It's like, okay,
Of
I can have
course.
my yard, I can have my kingdom, and
Yeah,
why would I wanna be 2 hours out of the city next to yeah, I can see in their window, like, I I what they look like, a lot of them, like in Florida and Texas where they went absolutely bananas, they
yeah,
look like army barracks. I mean, it's really wild. It's like, why? Like, I don't even understand.
no,
So, yeah,
yeah.
anyway.
I mean, if I'm hearing you correctly, just tell me if I'm wrong, but you're learning much more by just going to cities and places and using your eyes than you
Yes.
are reading the data, right? Because
Yeah.
this data is all BS. Does that sound
Yeah.
right?
Yeah, and it's even I've now gotten to a point of really so religiously tracking it for almost 4 years. I've gotten to a point where I don't even know why I do that anymore. Like,
Y-
I mean, I've
Yeah.
now caught them over and over. These are modeled results. I mean, they're modeled. There is no question in my I mean, I come from finance, where I did forecasts and I did modeling, and, they're so sloppy, and this is just one example, which you may have heard in another podcast, but so, uh, we Fred publishes inventory, okay? Listings for sale. They get that information from, drumroll, Realtor.com, okay? Um, Realtor, so they publish the median listing price as well on Fred. So I use that as like okay, what's the consumer, what's the sentiment around listing prices? Well, I knew exactly what the peak in that was. I knew the high. I reference it all the time. I pulled my monthly data, and lo and behold, they restated. This was back early in the spring. They restated through the summer season, but the numbers from last year through the selling season, so that when we got to June, we did not have a year-over-year median list price decline. There was no note on the bottom of the website. There's no mention. It's like, what was it, a data issue? Like, tell me what it was. Like, I can understand, like, somebody wasn't reporting. Now you can look. They don't even care anymore, Henry. Like, now you can look year over year, the past 2 months, exactly the same number. It's not
Man.
statistically possible. And I
Yeah.
caught this
Yeah. Yeah.
yeah. Yeah, you can see it. It's like, okay, and then this is when I really was like, "Oh, no, you people." They took so NAR, I can now see they're definitely modeling results. They're not using the MLS. There's over 600 of those MLS in the country. They're not taking real data. So when they went to do their month-over-month price increase last month, it was 0.24%, or maybe this was 2 months ago. And that was exactly the increase that we saw in the median listing price, 0.24%. How is that even? I had somebody, so I did something probably 6 months ago where I took all of the data from the new home survey census, and I took all of the data from NAR, and I showed how often numbers actually repeated across series. And I could tell, like, I could look at seasonality because that's what I do. I track like past 25 years. What does the seasonality look? And by doing that, I could almost see exactly how they were manipulating and modeling prices off of each other's data. So I published this and somebody ran the statistical analysis. They said it's just not possible. It's just
Yeah.
not possible. And so I'm at a point where I'm like, I'm the idiot that's been religiously tracking this data for years because it's just not. And this is where so here's where I'm so stupid. NAR got in trouble last time. They had to restate all home prices from 2008 to 2011 because CoreLogic, who uses recorded mortgages, said BS. We can tell that you were overstating home prices. So in my silly little brain, I think, well, surely they wouldn't do that again, right? Surely they learned the lesson. No, 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 no. That's not how this works. And then you think, oh, well, Redfin, I mean, they'll publish their data. That's so cool. But then you realize everyone has a vested interest. They have a
Yeah.
vested interest in the narrative staying within this, home price appreciation model. And so they got on board. And so it's no actor, and this is the thing, having lived in this industry for almost 20 years now. Next year will be my 20 years fully in it. Like, you realize that anybody that comes in saying they want to transform it or improve it, they all just they quit and they sign up. It's just too lucrative. It's too. In 2019, I was working at a fintech and independently, and went down to an origination shop and saw out front a Lamborghini, a Porsche. And I was like, hold up, hold up, hold up, everybody, hold up. This was 2019. I was like, didn't we watch this movie?
Yeah.
Did we not watch this movie? And no, it was all the same behavior. So it's just, there's a vested interest. Nobody learned anything. That credit quality gospel singing was all fake. They removed the debt to income thresholds out of the legislation, and our government just took the place of the private market last time to keep the thing going. So, yeah, sorry, but
And
that.
there's nobody to take the place of the government for the next one. That's why we're backed into a corner, right? You keep moving the issue up a level,
Mm-hmm, mm-hmm.
and eventually there's no one above it to fix it, right?
Right, and do you want to be the person? Like, some people say, "Oh, we're going to UBI or Universal Basic Income," and blah blah blah. I was like, okay, so do you want to be the person whose job it is to give away houses? Because let me tell you,
Yeah.
that person would not be safe.
No.
You're already hearing videos on, social media right now about if SNAP benefits if they don't get paid out in November, that there's going to be large scale robbery. This is already being planned because
Yeah.
people are desperate.
Man. Oh, no.
And just think about all these empty subdivisions. Pretty soon, somebody's going to get smart, bust the homeless into them. I mean, like, we are on the cusp of actually having to pay for these mistakes. And right now, the government holds 85% of the mortgages. This is not a private market at all.
Man,
Yeah,
that's
it's crazy.
insane.
It's insane. For the ones we can track. We can't track this private node space. I think it is getting bigger, very 80s style, where you do the seller financing, stuff like this. All this crap that started the SNL crisis. And so they're doing that again too. So you've got every major economic disaster like SNL, .com. All of this is like converging into one, as it's been, I think, rightly dubbed everything bubble, you know.
Yeah. Yeah.
So
Wow. Boy.
I'm sorry.
Um, no, no, it's amazing information. I wanted to ask you because you said they're just reusing the same numbers in these reports, which I thought I knew what you were referencing, but I saw that exact same thing in the jobs data. I'm pretty sure it was jobs where it was like this month, this many exact
Oh,
jobs, and they did it like
jobless claims. Jobless
jobless
claims.
claims. Okay, like
221, 221, 221.
in a row,
Right.
like
Over and
over
over
and
and
over.
over. Yeah, exactly.
So you may not even know or have a guess, but it's like, is this some massive conspiracy, or is this like incentive structures where we are so desperate, buy us some time and put something in because otherwise we all lose our jobs the next day? Like, what do you think's causing that, or who's behind it?
It, y- I waffle so much, and I'll tell you, when I started out, I just thought it was negligence, it was ineptitude, it was. But then, you start to see these patterns and you're like, can I mean, so I don't have the answer right. I don't know for sure, but what I can say is I can't rely on the data. And
Yeah.
what I've started telling myself, because the narrative out of administration changes every hour. Like, and so, there's so much noise, it's difficult to see the signal. So what I've kind of told myself is just look at what they do. Look at the actions, not kind of all the rhetoric that's out there. And that's why, watching them shut down that FHA program, watching them actually do a cease and desist on what's called I-10 lending, and that was lending to immigrants, H-1B holders. Things they told us, everybody said could not possibly be happening. They were at the month right before that they stopped that. It was 6% of all loan locks. That is not a nothing. That is not a
Yeah.
nothing. And then you go to places like Chicago and Portland, where they were giving out in Portland, they had a down payment assistance program that they got into trouble because it was only offered to migrants, $30,000 down payment assistance. Chicago, $15,000 for rental assistance. I mean, just absolute insanity was
It's
going
insane.
on.
It's insane.
And so shutting these things down is going to have an impact. Do they know how much of an impact? I don't know. I have a former boss who's at Freddie Mac. He was the last one standing. I've not talked to him. He's the CFO. And the next quarter, they took $900 million in provision for loan loss. So if anybody, he should know. He should know what's about to happen. But I don't know. I don't know. But how can you have jobless claims come in that range when you have 50 states reporting and there's all kinds of technical difficulties reporting all the time? Like, how could it be in such a tight range? It's just not possible. So I think somebody could make a good argument that there are folks that are aware. They're aware and they are doing whatever they can to keep it propped up until they just can't anymore.
Yeah. All right. I think I have two more questions. One, I'm sure
Oh, worn
is
you out?
I'm sure this is related, but I didn't really know how to weave it in. But you said something about Nvidia. I think you said they were committing accounting fraud. What are you seeing there?
So I would recommend everybody watch my good friend Nobody Specials videos on Coreweave and Nvidia and sort of Jensen Huang's history, as well as these entities like Coreweave, where they're doing what we call round tripping. Um, you know, uh, he does great deep dives into those companies and they're basically doing similar to what Enron did, and and really they're telling us they put it on the front page of the Wall Street Journal, except the players were like Microsoft, OpenAI,
Yeah.
Nvidia. They're just, but wait, it's on the front page, so why nobody cares, right? They don't care yet. It's like it's only going to matter when it matters. And that's what we're seeing in the auto sector right now. I believe we've all been talking about auto for a couple of years. Like, we knew it was going to be bad. I knew Ally is my former company by another name. I knew what they were doing, and I knew that chicken would come home to roost, but it has not mattered. You could yell this from the top of a building, nobody cared. When did they care? Tricolor, who was lending to immigrants for autos, often without credit scores. First Brands, doing double pledging. Prima Lend, they were on the commercial real estate side. All of a sudden, you have all of these credit people who provide credit going into issues, and you're finding fraud and double pledging, and it's mattering. Suddenly, Jamie Dimon starts talking about cockroaches that I guarantee you he's known about for a very long time. And it matters now. And Nvidia will be the same way. You're going to have some fall guy in this, and it's likely because of his past and because of these ties to some nefarious actors, like really nefarious, they'll probably be the ones on the chopping block. And I think what we're going through right now is kind of like the last pump and dump. It's kind of like Wall Street saying, okay, everybody, this is your time, get out while you can. Which is, you see so many insiders selling. And Jensen Wang is one he sells all the time. And so, yeah, it's crazy. So I just think, and this is why people forget Buffett's on the sidelines. People use his investment in the builders, and I'm like, no, no, no. Buffett gets a call when like my former company got a call. He bought our distressed debt. Like that,
Oh,
these are things we don't like. I guarantee you there was probably a call made about a future plan around the bailout, whatever it's going to be, and afford because Lennar got a bailout last time. They got a tax bailout. So, what we'll have to do is probably government might do something like Intel, right, where they buy some shares into the builders and they take some of those homes off their balance sheet and put them into these. They just passed a lot of legislation, the BBB, for all these kind of more rental assistance and more kind of selling homes to people at a certain percentage of median income. So I think they're getting ready for that distress and that bailout. So I think it's just a matter of time with Nvidia. And honestly, I think I spent 2 hours yesterday talking about my own experience training large language models and just the fact that we are not where people think we are. And these use cases are very limited and they're also very intensive to keep running
yeah,
because they get off the rails very quickly.
yeah. Wow. How how do people prepare then for the next few years to decade? Whether it'd be very different if you're a homeowner versus a mortgage holder versus a potential home buyer. How do you think you go about the next couple of years?
Yeah, so the first thing you do is just pay down whatever debt you can. I mean, it is the people getting hurt the most right now are the ones with those credit cards and those unbelievable rates. It could because a lot of people start with, "Oh, well, buy gold or do this or do that." Well, a lot of people don't have any of those options. They've got student loans, they got a ton of debt. So if you're in a situation where you can't buy assets, you can't liquidate something, you can't save, then just do your best not to go into debt. I changed my entire life 3 years ago when I started seeing this coming because macro trends you can see from a long way out. Nobody believes you, but you can see them. And I moved, consolidated households, started a garden, and those are the things that I did because I could see what was, and that Christmas I bought all of my, every kid in my family, all of my family members a silver coin, and I'm like, this is what you need to be investing in,
Yeah.
which is finally paying off or whatever, we'll see. Anyway,
Yeah. Yeah.
um, but so I think if you own a home, if you know you need to move in the next 2 to 3 years, go ahead and list it. Like, go ahead and list it. Do what you're doing, sell it and rent because you can rent cheaper at this moment. So if you've got high equity and I want to offload this property in the near future, go ahead, list it. At least get a pulse check because I think that's the first thing everybody needs to do is actually realize that Zestimate is completely false.
Mm,
And that's not what you're going to get for the house. And so get a pulse check. If you do have a little bit of capital, save your money. This is a very dangerous time all over the place. So I personally would probably just put it into something I consider very safe, like a CD, maybe very short dated treasuries, because all kinds of things could happen from here. And then like I do believe gold is an asset worth holding, but you know, right now it's a little scary what's going on in that market. And so I would probably want to just me, and of course, none of this is investment advice, but if it just me, I'm being cautious here because it's a little scary out there. But just wait, and honestly, I think too, it's about our just like people feel like they have to own a home to have made it in life, and
yeah.
that's just not true. It's just not true. I mean, it's just your kids will not remember whether you own that home or not. I remember when my parents got divorced because our home went into foreclosure. You know, when you don't have that kind of stress on you, your life is happy. I mean, we all have been taught to want things that we really probably don't need and shouldn't have. But in reality, what really is going to, be a huge downer is when you can't afford that house and it tears apart your family. So I just think, people need to understand what they really think what they're getting into. This is a really big decision.
Man, no, it is sad because it's right now the people that are most vulnerable are the ones that are pursuing doing the right thing. Like go to college, buy a home, and now college's return on investment is just terrible. And
Yes.
buying a home is, insanely risky. And it's literally the people that are trying to pursue the right American dream that are like really going to be in trouble. It's
I call
that's
them the
that's not
forgotten
good.
Americans. Yeah.
Mm,
And this is very similar to the Great Depression. The lower class kind of got taken care of through social programs,
right.
upper class, but it was the middle class. And Amity Shlaes wrote a book called The Forgotten Man. And I've just kind of picked that up as the forgotten American because it's absolutely just like you say. Those are the people that are getting hurt the most.
Crazy. Um this was very interesting. I really appreciate you taking the time to talk to a stranger. So thank you, Melody.
Oh,
I'm gonna link to your Substack and your Twitter. I was gonna find the Nobody Special um, documentary or
yeah, I can send you a
video.
couple links. Yeah, yeah.
Okay, and I'd love to watch those and include those. Anywhere else you want to tell people to keep up with
Uh,
your work?
I do a YouTube every couple weeks, M3 Melody YouTube as well. But yeah,
Okay, I'll link there as well. Thank you very much for taking the time,
you got it.
and
Thank you for having me.
yeah, I hope you have a great weekend.
You too.
Thanks.